Welcome back to the Eric Krown Crypto channel. Wishing you a happy Northern Start to this nice Friday morning as we wrap up this week. A week of a lot of opportunities, actually. A lot of setups, of which I wanted to follow up on the 6-hour HPDR setup that we witnessed yesterday, leading into that move towards almost 29,000 bucks there, it looks like. And what that means for today's closure for the weekly 4 CME, and then maybe even threaded into the higher term timeframes if we do indeed have time. Speaking of time, we have limited time today because it's a big travel day as we get prepared to leave Dubai, actually. But we're coming back soon, and I do want to say a massive shout out to all the people that we met here in Dubai, serendipitously and also deliberately. It's been an absolute pleasure. A lot of really cool people, and you know, we look forward to seeing you again soon, sirs and sirs. Yeah, other than that, I should probably let you know that yes, you can still get the Jewel Light for free for the first month if you follow the directions in the description below. And now, without further ado, let's just jump right into it. I want to start off first with the 6-hour time frame HPDR setup. Now, this is again coming hot after that 12-hour HPDR setup that we witnessed 2 days prior, getting that short-term move to the downside. Basically, this move from what was it, like mid 28s down to like 26.5 or so. Now, or not now, but yesterday, a 6-hour setup fired off. The setup is this 6-hour time frame closing below these range lows right here, that blue range low that my cursor is currently on, the 50% of historic returns range lows, what that actually is, coupled with declining close over closure volatility. Oops, wrong one right there. Looking for the right one right here, which happens right here, obviously on the moving average that we're looking at, plus that closure below the range lows simultaneously right here. Very important. That initiated a higher probability of a bounce. In this case, we were looking at about a 68.35% probability of a bounce, somewhere between about 5% all the way up to 7%. And from setup occurring to current wick high, about almost 6% right there, just under 6%. So well within the context of that. But here's the thing. You'll notice that with this script setup right here, we actually don't have an official exit just yet because the exit conditions have actually not been hit. And what's interesting about this is not only have the exit conditions not been hit, but the average number of bars in in trades that we've seen over the backtested 79 period for the past 3 years is 18. And from when that particular setup fired off to, you know, the current high of that rally, that was 3 bars. So bit of an outlier right there. So what does that mean? It does mean that there is that there is a decent likelihood that, you know, we do see this particular one trade onwards and upwards from here. So what essentially is the profit taking condition, and then what is the daily, or what is the amount of average trades or average days condition or average bars condition? Well, first things first, the average bars condition was 18. 18 bars puts you where? That puts you into like Monday. So is it reasonable to say that this one has not fully played out just yet? Possibly, yes. I think for the more aggressive and probably reasonable people, you probably, you know, should have taken some off right there. That was a nice move, very fast. Kind of hard not to. Personal opinion. But of course, it's not financial advice. I'm not a financial advisor. I'm just a professional derper. But in this case, you know, we do typically expect this particular setup with these criteria to, you know, to take longer, and the profit taking criteria for the way that it was tested with the PMARP getting above 75 percentile, which is, you know, it's kind of close to, but still far away, would suggest that, you know, if this one does play out and fulfill, you know, the hit rate, or sorry, be another, you know, win in the streak of the hit rate over here, of which we've actually seen a few in the past month now. Yeah. As you can see right there, we would expect this one to trade higher from here. So I actually don't have the reverse PMARP on my chart right now. Otherwise, we actually could forecast the price level that would need to be, but I would just guesstimate like somewhere around low 29s if that does play out. Anyways, of course, this can still, you know, this obviously still is subject to invalidation. That would very obviously be below the wick low of the official setup over here, which was like 26.6 on a, you know, on a closing basis. But let's thread that through into the weekly closure now, because it is, you know, the last day of the week, it's Friday. So CME is closing for the week in about 14 hours, 14 minutes, and 9 seconds. And it's going to have a chance to do something that it hasn't done since March of last year, actually. And that is close above that mean band, baby. That mean fucking band that's been rejecting this thing the whole damn way. Well, not really the whole way through, but hasn't seen it for the whole way through. And it is currently resting at it at a price of 28,050. I'm talking about this area right here. Why is that relevant? Well, for this particular explanation, I need to go do spot price action and explain that anytime that we've seen the weekly Gaussian channel turn red, and then close, and then price action, works its way back into the red zone and then closes above the mean band, it's gotten a free ride to the top side of the mean band. Or sorry, not the top side of the mean band, but the top side of the Gaussian channel. I had terrible sleep last night. I had the best steak of my life. Holy shit! Tulum restaurant in Dubai. It's like, it's otherworld. Like there's not a better steak in the world, or at least I haven't had it. I can assure you of that. But more to the point here, I didn't fucking sleep, so I keep on mixing up my words. In this case, yeah, anytime that we've seen it close back above the mean band, boom, free ride to the top band right there. Close above the mean band right here, boom, free ride to the top. Close above the mean band right here, free ride to the top. And does this, is this time different? Well, perhaps yes, perhaps no. But more importantly, and again to the point, is that CME will have a chance to do that officially with today's closure on the daily/weekly. I would really say anywhere above like 28.5 would start to look pretty damn good. Technically speaking, the mean band is at just above $28,000, but the more above it, the better, really. And then yeah, the top side band is where it is about $32,000. So within the coming weeks or month and a half, that would be at least reasonable to be looking at from this particular view over here. Anyways, moving onwards, and let me just bring up my notes because I actually completely whiffed on that as well. So let me just get my phone over here. And where are they? Come on, you draft bastard. There you go. And yes, okay. I didn't write them down. Wait, what the hell? I know that I wrote them down. I know that I wrote them down somewhere. Oh, well. Whatever, I can just do this. I can just do this by heart. All right, so not only that, but on top of that, weekly for spot price action is going to be closing soon here too on Sunday, not today, but Sunday obviously. CME's closure is going to very likely influence that massively, but as you can see, spot price action right around it as well. So if CME doesn't do it, spot will have a chance as well in the topside band there, basically at around 33,000-ish, let's say. What's also interesting on the weekly chart is that Bitcoin, no, the weekly RSI did have hidden bullish divergence is working its way back into the bullish controls, and for the first time since, September of 2021. September of 2021 was way over here, by the way, when Bitcoin was putting in this rally from it's right here where this actually happened. Bitcoin was put in this rally from about, what was it, like $43,000 to, the current all-time high at $69,000. Great number right there. But as you can see, it's been some time. It's been some time, and perhaps of note as well, coming into the weekly closure again on Sunday alongside the Gaussian channel that we just looked at. Plus, even the weekly jewel looks like a continuation potential here as well. We just want to see it turn cyan, and if that happens, at that point, yeah, I do think, based off that and based off the other things that we looked at and what we'll also look at in a second here, looking further north into maybe mid-April is, I would think, reasonable based off stats, based off the probabilities. And speaking of, let's end on this note. Let's bring it over here to the 5-day setup and put this all into context, hopefully. And what do we have? Well, we have the 5-day volatility versus stochastic momentum setup. What is a setup? Essentially, 5-day volatility represented by the BBWP indicator right here, getting below 15 percentile or more, which is extreme contraction, and then expanding from those extreme lows coupled with the direction of the stochastic oscillator has led to a high probability in the direction of the stochastic oscillator, like a large move, an average move, as we've seen, of about 40% or so over the course of just over a month. So the reason why this one is relevant, because one, we saw volatility compression right here, and now we're seeing volatility expansion. Yeah, I want to see it expand more, obviously, but first things first. With this one, it's kind of similar to the last one we did see in January, before that last major move from 17 to 24 or so. But ultimately, right now, the reason why this one is more relevant for the boo laws is because the 5-day stochastic oscillator remains pivoted to the upside, as you can see right here. So that does imply that there's a higher probability of this one continuing to the upside alongside, assuming that volatility expansion continues from here. What kind of probabilities would you be asking? Well, we can go reference this spreadsheet here, which has documented all of the 5-day long setups, not the short setups, but the long setups. Like we'll go over the short setups as well, but as far as the long setups go, there have been 11 of them with that particular signature, and 11 out of 11 have actually gone in the direction of the 5-day stochastic oscillator alongside volatility expansion, which I thought was, like, we don't expect that to always be 100%, like, obviously, but pretty fucking good for now. On average, it's taking about 33 days, 33 and a half days, with an average return of about 43%, with a standard deviation between about 33 to 53. So, you know, again, as far as timing goes, what would that kind of put us towards? Well, assuming that it started right there, 30 days or so puts you where? Early to mid-April. And if we were to go to the top side of the first standard deviation, where that put Bitcoin? Like 31, 32,000 bucks. So, you know, is that still in the cards? I suppose so. I suppose so. As always, there needs to be invalidation for such things. You know, where does a setup like this fall apart? Very obviously below 26,500 on a closing basis. That's kind of the line in the sand that I'd have right now. Below there, you're going to see me get pretty damn bearish. We can actually go back to, I don't have the damn chart up right now. We can go over to the HPDR indicator, the Herpaderp indicator, my favorite indicator actually. But as far as this goes, has the daily range moved? Yeah, it actually has moved. No, it has not moved. I'm just on the wrong time frame. There we go. Yeah, still showing about 26,500 for the 50% of historical returns range lows right here, or actually range highs, which is our current range lows. Anyways, before I get too verbose with this one, daily, you know, higher term time frame closure below these regions. That's to the point where you're going to see me on this channel start to get like, I don't know if the word is like mega bearish, but like but bearish. I mean, that would be a trap by definition. At least moves back down below like 25,000 bucks after that, and then I want to come back and reassess. But yeah, until then, you know, probability statistics still favor the upside as they have been for the past few months. You know, going back to like, I don't know, December, January. And yeah, I think that's a good place for me to be leaving off on this particular video. As always, I want to wish you the best of the best. Take care, much love, and see you hopefully soon.